Recently, the U.S. Mint halted production on 2013 Eagles when it ran out of their supply of blanks. This, however, does not in any way mean that overall silver demand has increased, or demand for any other bullion coin has increased. Because the Mint underestimated the supply of silver blanks needed for one particular coin, the Mint was forced to halt production of that coin. This is being portrayed by those that sell bullion that the Mint was somehow unable to obtain physical silver, when the Mint simply underestimated 1 month's worth of demand for its product when it ordered silver blanks. The Mint does not buy bulk physical silver. The Mint buys a certain number of manufactured blank coins to press into Eagles, as shown in a video by the U.S. Mint.
We receive our silver blanks in from the vendor. Headquarters handles the contracts, and they order these planchettes or blanks from the vendor. It comes in this form. It has an upset edge.
Like most manufacturing, mints use what is referred to as just-in-time inventory. This is sometimes called Kanban or Kazon. Because it is expensive for companies to hold inventories, all manufacturing companies, including government mints, attempt to estimate the amount of resources needed to produce the amount of product that will be sold. For example, a mint will look at how many of their coins sold in the past, and then use statistics to try and estimate exactly how much silver they will need to produce enough coins to meet demand, so they do not have extra unused silver in stock, or fabricated coins sitting in inventory not being sold. Because inventories are expensive to hold, the margin of error in predicting the amount of demand for a particular coin is pretty small. Sometimes a mint will underestimate the demand for a particular coin. However, one particular coin selling out 1 month does not mean overall demand for physical silver or demand for silver in general has rose. Let's look at Eagle sales. This data comes from the U.S. Mint website. In January 2011, the Mint sold over 6 million Eagles when the new coin came out. The next month, Eagles sales dropped hard. In January 2012, the Mint sold over 6 million Eagles when the new coin came out. The next month, Eagles sales dropped hard. The total sales in 2012 declined more than 15% from 2011. Now here we are in 2013, and we hit 6 million again in January, and that is being portrayed as some sort of big event by people that sell silver. However, last year Eagle sales were also over 6 million in January, and yet the total demand for the year declined from the previous year. The Silver Industry's own interim report that just came out 2 months ago shows that when the final numbers come out for 2012, bullion demand for 2012 is expected to show a 24% decline from 2011. Furthermore, in the Outlook for Demand report, also from November 2012, the graph in the report shows bullion demand in 2014 to still be 10 to 15% lower than the 2011 level. If the demand for silver was increasing, the price of silver would be increasing. If the supply for other physical silver was running out, premiums for physical silver would be increasing, and other types of coinage would be selling out. Kitco would not have had sales on junk silver just a couple of weeks ago.